Hey traders, Todd Gordon here of tradinganalysis.com. Hope you guys are well. Happy Tuesday, May 16th. Happy birthday, Mom. So we're going to be going, so what are we doing? Gordo is going for growth stocks. Actually, going for Gordo growth stocks. Gordo, fat, Gordo, Todd Gordon. Gordo, fat in Spanish, you know where I'm going with that. A couple different ways I wanted to title the video, but I think you got the point. We're seeing a pretty good move higher in growth, specifically technology, communications, and consumer discretionary is starting to make a move. It depends on which industries within consumer discretionary, which has a lot of industries if you look at. There are some pretty good moves, and there's some of the larger cap discretionary stocks are moving. So are we going to get a breakout? That's the big question. So just a quick update here. We'll take a look at a couple of the indexes. I want to look at a few stocks. I want to look at rates, interest rates that are causing the rotation. In fact, let's start with that. I think that really sets the tone for everything that we're doing here. And this is one of my favorite charts out there. So what's happening right now is we're looking at the 10-year U.S. yield on top of the value growth ratio. So this is the iShares IVE into IVW. And what's happened as interest rates spiked back here in 21 and 22, you could see value clearly outpacing growth. Right, so those are your staples, your healthcare, utilities, real estate, to a lesser extent, materials, and so on and so forth. Well, what's happened here is the correlation, is it breaking or is it not? And what I mean is the value growth ratio right here is moving down, which means growth is outpacing value. And if you look at the relationship, that's very tight here with yields and value growth is moving down. Again, growth is breaking out, and yields are not quite breaking down yet here, and they're very stubborn around this 3.4, 3.5. And the question on the table is what happens if yields break down? Does the correlation that we've seen since 2021 continue to see rotation into growth tech stocks, or does the collective market community take it as a sign that bonds are being bought because of coming slowdown and recession? I think initially, if we were to break down through the 3.3 level, let me show you that chart real quick here. If we were to break down through 3.3, I think initially the markets would be afraid. But then I think they would realize that, wait a minute, longer term interest rates down cements decreased longer term inflation outlook, which is going to continue to, I think, push that rotation into growth stocks. And so again, I think initially the market's going to say, they're buying bonds because of recession slowdown. But then they realize, wait a minute, no, they're buying bonds because maybe they're just putting the traditional 60-40 portfolio back on. So here's that 10-year yield at about 3.2. If we break down again, then they'll say, oh wait, they're just buying bonds because people are trying to get some yield, 3% yield, still pretty good. Buy up the bonds to construct a normal portfolio, and then that growth rotation continues to happen. So back over to the rotation chart here. As the value is outpacing growth, take a look at the rotation here that you see. Okay, and I've got a few different growth value ETFs in here, which are pretty important. So let's just take a look at this on the monthly. So as rates are moving up, what was happening? You saw the S&P 500 value pushing in. You saw mid-cap value pushing in. You saw all these growth, S&P growth, Vanguard mega-cap growth, Vanguard mid-cap growth, Russell mid-cap growth, all rotating out. Now what's happening, okay, so we got the move up in yields, move up in value growth, but then you can see this guy started to diverge a little bit. Yields didn't make a new high. Okay, now what's happening on the monthly? We're seeing a big move in the right direction, which is a hook up into the right, and growth, mega cap, mid cap growth, and iShares mid cap growth as well. Value is starting to rotate out now. Okay, so what does that mean? Okay, will we see a move down in yields, which again would continue this rotation of growth into the monthly leading and pushing value out of the way? As we get down to the weekly rotation, what we're seeing here is growth. Of course, this is a smaller time frame. We were looking at monthly, now we're at weekly. Growth has already made the move into weekly leading quadrant. Mega cap has clearly made the move. Mega caps are being favored in here. Value is moving out, but what's interesting is the mid caps are starting to rotate up. Mid cap growths are starting to rotate up. So I wonder if, again, we're going to see that continued push lower in value growth, which means higher in the growth ratio, continued move into tech, communications, and some consumer discretionary, okay? So let's take a look back, and I know I'm kind of all over the place here in this presentation for you, but that's just kind of the market we're in here. So so back to the NASDAQ. The big deal here is we've not taken out the August high. Okay, the August 2022 high, 13,720 is the level. I have that by memory, pretty close there. August high. Now, is this a 5-wave move off of the October low? And if it's a 5-wave move, that means we are due a wave 2 correction. So if we break through there, you might want to say, uh-oh, we're gonna sell back off. Now, I have a different wave count, and it does carry over into the S&P and the NASDAQ, but I want to show it to you in XLK. Okay, this is the tech sector spider, right? So we're going to go over here to green count and XLK, and here we go. It's possible, guys, from an Elliott wave point of view, off of the 2021 highs here, it's A, B, C for W, X connector. That's 5 waves. So I'm wondering if we do A, B, and then a sort of truncated C of Y, which again, I'm talking kind of higher level Elliott wave here. Did the correction end here in January 2023? And that means the new uptrend did not begin, in fact, in October, but right here. And if that's the case, and it's not a diagonal off the lows like I showed you over here in the red, that does not call for a completed 5-wave diagonal off the lows and a correction down. That says we're in 1-2-1-2. Okay, which means it's going to look like this. And the consolidation that we're seeing is about to give us a wave 3 of 3 move up. Now, we're at the 618 retracement off the all-time highs in XLK. We're through it. There's the August highs, which we just broke in XLK. Technology broke those August highs. The 786 retracement, which is the retracement of last resort, if you break above that, that's the 786 of the entire bear market, 21 to 22 decline. If you break through 786, that tells you to expect new highs, okay? And that would certainly square up with this wave count right here. So I'm wondering, are a lot of bears caught on the wrong side? And I'm wondering, again, what those yields are going to do. Now, the group that's clearly leading us right now are semis. And you take a look at NVIDIA. NVIDIA just is a beast, can't be stopped, all right? So NVIDIA, remember I talked about that 786 retracement off of the late 21 highs in the case of NVIDIA, all the way down to 22. NVIDIA broke the 786 retracement, and that real simply means if you break 786, the relationship is you're going to look for the 1272 extension. So you go from retracement territory to extension territory, and that's going to be up here, which is going to be, I'll be right there. I'm running to my kid's concert. It's going to be new highs. I'll have to come back and I'll have to work on that to give the update here. But on the wave count, we are still, I think, in a 3rd wave, and we should be able to get a 3 handle in NVIDIA. And at that point, wave 4 pullback is due before ultimately we gather ourselves and make new highs in NVIDIA. Okay. So we have a stock swing desk going on right now. We just put a new position on in a small semi equipment company. and not, I think a lot of you probably follow. I didn't really follow it. ONTO. So we carry real-time positions, entries, exits. We're building out the portfolio for our clients at Trading Analysis. And check this guy out here. Diagonal 1, down in 2, and ripping through on the upside again. 100% would take us to new highs. AMD has had a really good move. We also had a diagonal off the lows in AMD, set back in wave 2. Wave 3, 100% minimum target will be at, where's my 100%? Come on up. Should be 140, just above 150. Okay. So rotation's happening. Rates, I think, are driving it. We'll see if yields break below 3.3%. We have clarity on the Fed. Q1 earnings season was very good. Not nearly as bad as they thought it was. Revisions for Q2 are not nearly as bad as they thought they were, or even they're below average in terms of setbacks. So earnings look solid, or not as bad as they thought. We have clarity on where the Fed is going to be with rates. We just need a little bit more clarity on the politicians and the debt ceiling. All right, so hope that helps, guys. Have a great night, and I'll see you on the next video update.